Contract for deeds, mortgages. What's the difference? Is one better than the other? We're going to dive into it all next on the Paperstac podcast.
Coming to you from sunny Orlando, Florida. Welcome to the Paperstac podcast, where we cover current topics in the note industry, give you tactics for your note business, and talk with industry leaders to make you a better note investor. And now, your hosts, Brett Burky and Rick Allen.
All right, we're back. Here we are. Same bat time, same bat channel, same bat Band-Aid on your nose, different jersey.
Yeah.
Rick and Brett, back for more. What's going on, man?
Not much. Getting ready for Paper Source.
Yes. Mm-hmm. Yes. And who doesn't love Las Vegas?
Oh, yeah. That's true.
We are a Paper Source sponsor.
We are. Very last minute.
Last minute. We booked. We had our plane tickets booked 3 months ago. We had our hotel booked 3 months ago. We had forgot to pay for sponsorship.
Yeah, I look on the site. We're like, why aren't we there? And looking through emails, it's like, I guess we never paid for sponsorship.
But we were going to be there and we were going to be sponsoring. So
yeah, we were able to get in there.
It's brought to you by Coca-Cola.
There you go.
Mm-hmm.
So yeah, no, that's going to be fun. So if you're going to be in Vegas, come by and say hi. We'll have a booth for sure. We'll have probably some tote bags, some notebooks, and actually they're going to give away the notebooks. We won't have that, but that's what we're sponsoring at the event.
Sure.
And maybe some shirts.
Should be good. I didn't go last time. I think last time you guys went was 2019, right?
Yes.
It was the last
hoorah before they shut everything down.
Yeah, kind of, right? Well,
it was in April, so 2020 didn't happen.
Yeah.
You know?
No, it was not. It was late. I thought it was like September because we had November note school. Maybe. Anyways, yeah. Well, this would be my first time there. I know last time you guys...
It's a good event.
You guys had fun. A lot of people there.
A lot of people.
A big event, so we're looking forward to it.
Yeah, it's going to be good.
Yeah, good action-packed speakers. There's a lot of good ones up there. I'm looking forward to listen to what they have to say.
If it's at the same hotel, it's a big place.
It's the Tuscany,
right? And they have one area where it's just all where vendors and you eat and everything, and then a whole other area where you actually watch people from the stage.
Good.
So it's good.
Then, of course, they have the casino.
I mean, they have a casino, but, you know, I don't...
No.
I don't gamble that much, you know?
No. So, what's this the situation today? We're talking contract for deeds, CFDs, mortgages.
Yeah, we had somebody that came through Twitter, actually, which was different. We never get anybody from Twitter, but they were...
Twitter.
Yeah.
A lot going on with Twitter right now, huh?
Oh, very much so, yeah.
It wasn't Elon, was it? He wasn't hitting us up on Twitter asking...
No. It was some other guy, but he was asking about... You know, is it better to buy a CFD or is it better to buy a mortgage? What's the difference? You know, and 160 characters or less. So I was just, trying to see.
You couldn't respond in 160 characters or less.
Yeah, for real. So I was like, actually, other people had that same question, I bet. Like, what's the big deal? What's the difference? Is there different, both security instruments, but
correct.
Which one's more secure? I guess so somebody getting in, they might be on the site. Because I think he was saying he was on the site. We were talking about it, but that he's seeing like, well, when should I go for one over the other? And I was like, I don't really know when you should or shouldn't. So
they're both debt instruments, right? They're both instruments secure debt. One mortgage, or there's mortgages, which are in which kind of states? Judicial states. That's right. Then there's deeds of trust.
Non-judicial,
right. And then Texas has some funny ones in there, like mechanics liens or something like that, or I don't know. They have some other ones in there. But then, so in both of those situations, pretty much there's a transfer of title of the property. In a contract for deed or land contract, you typically are not giving the actual title to the property to the borrowers until they have fulfilled the contract, right? Mm-hmm. And so people used to... look at land contracts or contract for deeds as like this really slick way to get around the foreclosure process. Because they thought, well, what I'll do is I'll just put it under contract and then I can do what's called a cancellation of contract or an abatement. And I can avoid the whole foreclosure process. Well, that's... The courts kind of became wise to that, and they said, no, if the borrowers have been in the house for a certain amount of time, they've made a certain number of payments, you have to go through foreclosure and treat this like a foreclosure the same way you would anything else. So
interesting. Let me ask you a question. Does having a contract for deed get you around Dodd-Frank's type stuff, those rules of origination?
I am not going to answer that because that would be advice, and I am not giving that advice. But
Okay.
you can look at it as a way to look. My dad's got a saying. He's an attorney. He said, "If it walks like a duck, it swims like a duck, and quacks like a duck, it's probably a duck." So if you're trying to use this as a loophole to get around Dodd-Frank, the reality is it's just not going to work. You know, the courts are kind of wary of people who are looking for loopholes to try to do things the wrong way, right? Mm-hmm. You should want to do things the right way. If you can put a win-win situation together with the borrower and the lender, then that's what you should do. And if a contract for deed is the way to do it, then that's the way to do it. There might be a way around some licensing laws if you own a house and do a contract for deed. If you maybe look in states like Georgia, I don't know. I haven't done it there. I know I've bought some contract for deeds there. But, is one better than the other? I mean, there's a lot more case law on mortgages or deeds of trust than there is on contract for deed. If you do a mortgage correctly, less likely that you're going to get a judge who just doesn't like it. Sometimes you may get somebody who they just don't like contracts for deeds, and you never know what's going to happen if you go to foreclosure on one of those, right? You don't know, am I going to be stuck with a judge who just hates these things and he's going to hold my foot to the fire? One thing I will say is that they tend to trade lower. Yeah. Like there's more of a discount on contract for deeds. Right? Some of the differences is if you're doing a mortgage, you're typically getting an assignment of mortgage and an allonge or a transfer of the note. When you're doing a contract for deed, you're going to have an assignment of land contract. If they did do a separate note, because they don't always do that, but if they did, you'll have an allonge. And then you're going to have a quitclaim deed or a special warranty deed or something along those lines. So there's an extra document or two that goes in there, whether it's, sometimes they don't always do a separate note for contract for deeds. Sometimes all that language is wrapped up into the land contract, right? So if you look at a mortgage, typically you're not going to find the payment amount, the interest rate.
It's all going to be in the note.
It's all going to be in the note. You record the mortgage, you don't record the note. But in a land contract, sometimes they wrap it all up in there, so you'll see everything. Maturity dates, interest rates, default rates, the whole deal, all right in there.
Interesting. And do a lot of contracts for deeds, they don't always get recorded either, do they?
No, they don't. And there's
why is that?
Sometimes people just don't do it. And maybe they don't feel like they need to do it because it's not transferring out of their name, right? Like the title's never transferring out of their name. If I'm the borrower, I kind of want that recorded so people see that I have it. If you don't record it and 3 months or 3 years later, they sell the property with you in it.
Yeah. Wow.
Yeah.
That's interesting. So what's the difference between like an actual land contract and a contract for deed? Is there anything different?
Land contracts are predominantly going to be on vacant land.
Right, but I mean, aren't those the same thing as contract for deed?
Yeah. I mean, roughly, they're roughly the same thing. For all intents and purposes, they're the same thing. They're security instruments, and they're securing it where you're not giving them the title until they fulfill their contract.
Interesting. Okay. Yeah, I was always just kind of curious about that because you'll see that where it's like
you'll see them interchanged quite a bit: land contract, contract for deed.
Right.
Yeah.
And on Paperstac, we treat them the same in the closing, where they're going to get the same documents that you would get if it's a contract for deed with the house, or it's a land contract.
Yep.
Same thing. So I was always kind of curious about: is there any real differences? And is there any other states that just don't play nice to contracts for deed? I've heard some stuff about Ohio that people up there don't like them. And so
that's like I was saying. There's some of the judges who don't like them. So if you go to foreclosure, you're not going to do a cancellation of contract. You're going to do a full-on foreclosure, right? So one of the things that we do is, we've done in the past. One of the tactics we've used is we'll go ahead and we'll buy land contracts and then we'll convert them into mortgages.
Right. Using like an RMLO, right?
Yep. Do a RMLO, or a residential mortgage loan originator, to draft all the paperwork. And then what I'm doing is I'm creating paper that's, looks, smells, feels, tastes like institutional paper, right? So it's got the 1003, it's got HUDs, it's got the whole deal. I can put title insurance on there. Then when I go to sell it, I'll season it for a couple months. I'll turn around and I'll sell it. And now arguably it's going to sell and trade for higher than what it would have.
Interesting.
Yep.
And then what is the average price of using an Armello?
That was like $250, $300. It wasn't expensive.
And what's the benefit to the borrower in the house? Is there benefits to them?
Yeah, the benefit to them is now they're on title. Now they can reap the tax benefits.
Oh, right. Wow, because they don't get homestead, none of that.
No. So you get tax benefits, depreciation, interest, all that stuff.
Do you have to redo the contract at the amount of the UPB at the time?
Yeah.
So it's like a brand new.
So you do a brand new contract and you'll start it right then, and so if they have $63,133, you can figure out how much time was left on there and start it from there, or you can go ahead and say, look, do you want me to start this over at a 20 or 30 year or whatever? You kind of it allows you to really make everything perfect. It's like a redo on something that you didn't mess up, but maybe somebody else did. So like we have some lease options we purchased that the owner or that we purchased some lease options and FedEx lost, or we had them all in a box and the box exploded. Yeah. Mm-hmm. And so they all were like literally, like $80,000 worth of paper. It's just, I had copies of everything, digital, but that's a perfect opportunity, right? To say, okay, this is what I'm going to do. I'm going to have an estoppel assigned showing that I'm the rightful owner and they're approving it. Then what I'm going to do is I'm going to generate, I'm going to do a loan modification, or I'm going to go ahead and say, look, would you like to own this property outright right now? Would you like to be on title? And then I'm just going to originate a contract or a traditional style mortgage or deed of trust and satisfy the land contract once it's done. So now they've got the mortgage or deed of trust.
Is there any closing costs when you do that?
Yeah, there'll be some closing costs, but it's minimal. But think about if I'm looking at, I've lost the whole file versus now I'm not. Now I got a brand new loan that's originated like perfect.
Right.
It's perfect.
Have you ever had a borrower say, no, I don't want to do that?
No, never.
No?
They want to do it.
Do they understand the reasoning?
Well, they understand the benefits if you explain to them, look, here's the benefit to you. The benefit to me is if I ever want to sell this, I can sell it closer to par. If not, I take a discount on it.
Interesting. So those are some of the things of a CFD, contract for deed, and when to switch it over. So at the end of the day, from what you're saying, from what I'm understanding, is that both are security instruments, both are fine, but in your game plan, you're going to buy the CFD at a discount.
Bigger discount.
Yeah, and the goal is to take that, if you can, switch it over if there's enough time left.
Convert it to a mortgage.
Or
deed of trust, yeah.
And then at that part, you're basically adding, it's like getting a car and fixing it up, huh?
Yeah, it's like repairing, rehabbing, making it more valuable.
Yeah. Mm-hmm. I like it. Okay, anything else they need to know?
No, you still, when you're running due diligence, you're still ordering valuations, still ordering title. You probably want to look at a title insurance policy. Is not a bad thing, because what happens is title changes hands so many times with these contracts for deeds that you'll need a new policy if you want it.
Interesting. Mm-hmm. Okay, I think I got it.
All right.
I hope this will help out. If you guys have the same type of questions or something else we need to answer, he's the guy for it. I'll ask the questions, I'll let him answer it. But if you're going to be in Vegas for Paper Source,
yeah, reach out, let us know.
Mm-hmm. We'll be there. We'll have a booth somewhere. I'm sure by this time we're probably in the corner since we waited so late.
That, or we got the sweetest spot right up front.
That'd be awesome.
People are coming in and be like, well, let's put them right there.
That'd be good. But yeah, we'll see you on the next episode and hope to see you in Vegas. So talk to you soon.